Welcome back to the Stockspot channel. Today we're going to be talking about the latest half-year results of Dino Polska, and we're going to get started by looking at the chart. So the chart, price chart for the stock hasn't been doing quite well. It's fallen to about 300 PLN, which is not very good for us shareholders, but we'll be going over that why the market doesn't really like or find Dino that exciting. So let's jump into the first half-year results, financial results for Dino to the presentation. So we can see store openings going well, net sales area year over year slowing down a bit. Ooh, net sales slowing down quite fast. Okay, then that's when you start thinking like, oh, I really don't like that. Like for like, so the stores, so the increase in sales in the same store, so the stores that have been operating, how fast are the existing stores growing, like for like sales? 6.4% compared to 23%. That has slowed down massively. By this point, you must be thinking, oh, what is going on with this company? They're becoming bad. What's going on? Then you jump over to the EBITDA, minus 1.6. Wait, minus Dino Polska having negative growth. Okay, that's not good compared to 31%. And oh my God, that's like not the cherry on top, it's the bad stuff on top. EBITDA margin going down. All right, let's move on. So network expansion, as I said, going on as according to plan. That's fine. Dino solar, very good, producing a lot of energy, a lot less CO2, energy independence, especially in Europe with crazy energy prices and spikes of volatility. That's great. So no energy problems going on. Okay, moving on. We get the first evidence, or let's say first reason for why the sales are going down, the margin going down. So we can see that the food inflation in Poland has had some crazy inflation going on. And of course, with that inflation, prices have increased. So the revenues, the like for like sales, like for like revenues have gone up accordingly. And also, they really managed to capitalize on that inflation and have a very wide spread between the food inflation and also the like for like increase. What did the Polish central bank started doing? Well, they started raising interest rates because all of the people suddenly couldn't afford as much from their hard-earned labor, from their labor, which they need to bring up to earn their money, right? Hard-earned money through hard labor. They raised the interest rates, and it was very effective. And the food inflation started going down, very, very far down, 2.3% now. There's still a good spread between, right? Dino Polska still managed to get quite a good spread between you want the sales, of course, to rise faster than your inflation. Otherwise, it's a negative sum game. Sales mix, everything all right. Revenues, yeah, slow down, of course, because inflation is not a sign anymore. We'll get into that deeper in a second. EBITDA margin gone down 8.9%, so from 7.4 to 7.2%, 8.9% negative growth. EBIT gone down a little bit. Here you can see the EBITDA bridge. You can look at that yourself. I'll be talking about that in a different way. CapEx increasing. Yes, CapEx, they have high growth. They're building a meat processing plant. They're building logistical centers. They're building meat separation plants. So they do have high CapEx. It's still in their growth phase where they're not reaping that many of the rewards from the free cash flow. They're putting everything in to get even more free cash flow in the future. That's how a growing business works. Net debt, EBITDA, very low. Interest coverage, very high. That's perfect. That means they're growing organically, as I've mentioned in my video before. Store opening rollout going as planned, and that's about it. All right, let's delve deeper into why this year is happening. So why is this so low compared to last year? Why is this so low compared to last year? Well, in Poland, what we have going on right now, we actually don't even have a lower inflation. Actually, Poland has gone into a slight deflation. The producer price index is deflating in Poland right now. So the consumers are reaping the benefits of hopefully quick deflation. You don't want deflation to be going on forever. That's very bad. That's worse than inflation. But slight deflation on the short term is actually good because that means prices are going down. It's not like some news outlet telling you, oh, inflation's gone down, and then there's some fake economist talking, oh, yeah, prices are going to be nicer, and then your financially uneducated peers saying, oh, yeah, the inflation has gone down. I hope the prices are going to go down. No, they're not going to go down. They're just going to go up more slowly. But in Poland, the prices are going down, and that's affecting Dino being a grocer. What is also going on with Dino, as management has mentioned in the last earnings, they are waging, in fact, a price war with all the other retailers, being Lidl, Biedronka, and any other type of retailers being in Poland. And that, of course, a price war, it sounds scary, but is that I'm quite positive. Um, Price war sounds scary, but let's see why price war actually has is a very big thing for Dino, why it's very important to be strong in the price war. So, as I showed you in Sora P Capital Partners presentation, Dino's groceries are always the lowest priced or in a tie for the lowest priced, available locally to the customer because of Dino's price benchmark policy. Price benchmark policy. A key element of the management strategy is to benchmark the prices of 500 of Dino's top-selling groceries SKUs to to prices offered by discounter grocery chains, whose main value proposition is to offer the cheapest groceries among all Polish grocery chains. These prices are updated weekly. As we can see, multinational brands, Dino's trying to be competitive. Those, as I said before, the regional brands, Dino's trying to destroy the other brands on those. Dino's trying to be cheaper on your typical day-to-day consumer items, so especially foods, beverages, but not beverages and sodas and stuff. Those as well, especially the local like low tier brands, so your fake cola, your fake Sprite, whatever. There's like milk, water, so on and so forth. Anyways, so when there's deflation, right, everybody starts reducing prices. So price war ensues, especially for grocers. And if Biedronka, if Lidl, Netto, Auchan, Stokrotka, Carrefour, Leviathan, and so on, they all lower their prices, Dino is going to have to lower those prices even more because they want to be below them, right? So when you lower prices, ta-da, if somehow you don't grow, for example, Dino's would be if they don't make enough stores to average out the decrease in prices, their sales, their LFL, and their EBITDA margin is going to go down. That's the consequence of this price war. And in this case, you have to be thinking, okay, so margins are going down, stores are not increasing fast enough to compensate for the decrease in prices, at least not for now. Management is positive they have been in their last earnings call. So what is going to happen? Do I have to sell my shares? Is Dino going to go bankrupt? What am I going to do now? Well, let's think about it this way. So Dino owns most of their lots outright. Dino is pretty much energy independent. Dino has a standardized building models of format of stores. Dino has very aligned management and shareholder being the CEO, being the major shareholder. And because they own most of their, like pretty much all of their logistical network, also especially the fresh produce being the meat of the like infrastructure, they do have a lot of leverage in being able to suppress margins in the short term, beat out all the Biedronkas, the Lidls, the Kauflands, which have way higher costs on expanding their stores, building new stores, running their day-to-day business due to the structure of their logistics, and also having a lot of leases. So I am quite confident that Dino can at the very least, survive a price war. Of course, you never know how it's going to end if they are really that stable, especially not being a major shareholder, having someone on the board, really having really close insight into the company. But me personally, I think they can at least survive, and I'm pretty sure they will come out of it swinging. All right. So let's look again at some other numbers that are hitting on the EBITDA margin. So the first problem is deflation in price war, right? That Dino is in the war, guns blazing, everything is going quite fine. Second problem, general administration expenses and the general sales and marketing expenses, they have gone up. Why have they gone up? Because the margins stem from the rate of growth of sales and marketing expenses outpacing the rate of growth of revenue, as I said before. And here, this is what I want to say. The substantial growth in employment costs primarily contributed to the high pace of growth in sales and marketing expenses. So, employment cost. What happened in Poland? Due to the high inflation and also the change of the government, which is more, I would say, a bit more socialist than the government before. I don't care about politics. I just want to know how they affect my stocks, or the ownership in one of my equities. As a little disclaimer. So employment costs have gone up. That means that, of course, margins go down for the business, right? The minimum wage was raised by 20%. Next year, it's supposed to go up by 7%. And also, the wage, due to the fact that Poland is a very fast-growing economy as of now, the labor market is constrained, so the unemployment is very low. And it's very hard to, if the unemployment is low, it's very hard to bargain with the people we want to hire. They're like, hey, I want to give you a low wage. No, you don't have anyone expect me. While in other countries, well, you have maybe 5 people for one position, you could get one guy who's maybe willing to take a lower wage to do the same job. Well, you can't really do that right now in Poland, right? And also, as I said before, Dino focused on providing an attractive price offering. Faced with extensive price competition on the retail food market in Poland, exerts pressure on the level of gross margin. So also price war. So they're openly talking to you about that, and if you're not ready to go for it, then you should not be a part of this whole story, because I think also, let me give you some more insight. So I listened to the earnings call, and the management, all of the bankers, they want to know. They're crazy, like, oh yeah, how long is this going to go for? Oh, this deflation, tell me more about it. Blah, 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 blah. The manager pretty much told them, we don't know. Reading between the lines, we don't know. We're going to keep our policy. We're going to keep going. If all the other retailers, they're ready to go further, we're going to go further. So they sound very confident, and they're going to push down the prices as far as necessary to win this price war and until the deflation stops. So you're going to have to be ready for that. And meaning that sales will probably keep declining a little bit. With increasing store rollout, I think the decline will be reduced, but margins will probably not be that great. And when sales decrease and margins decrease, that's when the stock goes down in price, usually. All right, moving on. What else have I marked in here? Cost of employee benefits, as I said, they were quite high, right? And also expanding business. So they're building new logistical centers. They're building new meat processing plants, meat separation plants. So of course they also have more employees, but this is the employee absolute number. You also have to differentiate the absolute number and the full-time equivalent number. So you can have 20,000 employees who work full-time, but you can also you can have 30,000 employees and only half of them work full-time and the other half work part-time, or 40%, 70%, 80%, so on and so forth, right? So also they're not only hiring full-time employees, but in general the costs have gone up, yes. So due to the minimum wage increase, but also of course due to the increase in the absolute number of employees. Moving on. What I also found interesting. So in the opinion of Dino Management Board, the following factors may affect Dino's group business. This might be positive, this might be negative. Let's see. They have some negative, some positive ones. So minimum wage hike, which I said, negative, right? Pace of new store openings. Well, of course, there's going to be negative on the free cash flow because they're going to invest a lot into opening the new stores, building them, right? And Also, not only the new stores, as I said, they have logistic base, expanding their logistical network, expanding the agro-regional, I'm sorry if I botched that, meat processing plant, and the construction of smaller meat separation plant, also mentioned before. Positive one, lower electricity prices, but also Dino's investment in renewable energy sources, which long term, of course, is going to deliver you saving. At some point, those solar panels, they're going to pay themselves off. That's why renewable energy companies do invest in those, because eventually you're going to have some cost saving and in the future, hopefully, a nice profit from it. So this is also very long term thinking, which I do enjoy. Dino's network price policy calling for settling the price of key products at the level set by discount stores. Fierce competition, retail grocery market in Poland, may curtail the group's capacity to enhance its gross margin. So they're telling you, look, listen, guys, our margins are not going to be nice the next few quarters. We're in a price war. We're going to keep our pricing policy. We're going to keep comparing those 500 SKU basket items, and we're going to reduce prices if we have to keep being the cheapest retailer in Poland, right? At least for most of the items, and especially for local national brands, right? So that's what they're going to keep doing. And they're saying this may limit the growth of LFL sales to an average single digit level. As they mentioned in their earnings call, they have revised their guidance. They're not expecting second digit, they're expecting average single digit level LFL growth, sales growth. As I also mentioned, the strained so how do you say it in English? That's difficult. Employee market, so the labor market, there you go. Strained labor market, so low employment, higher salaries. That means group's operating expenses will rise, EBITDA margin, pressure on the EBITDA margin. Right. All right. But also they have something positive. I haven't marked that. I focused on the more negative things in this video. So gradual change of habits among consumers, particular active lifestyle, less leisure time, high frequency of shopping, and paying attention to the convenient location of stores, which for Dino would be very positive indeed, because the store density of Dino is very nice compared to other stores, because they can pretty much spread like the plague, right, in a positive way for us. And that higher sales, why would they mention this? Because they're trying to say, hey guys, we're going to keep growing. We have this price war ongoing. We're ready to fight it till the bitter end, pretty much. And we have the confidence that we can fight it till the bitter end. We'll just have lower margins for now, but we'll keep growing. The consumers, because they have to work so much, right? The labor market is strained. They're earning their cash, their money. They're going to have more money in the future. Maybe they're going to spend more on groceries. Our stuff is the cheapest. They're going to get the most of our stores. We're going to have more and more stores. Our store density is great. So everything is going just fine. All right. So it's going just fine, but still it's a very difficult situation. Let's end this video on the first slide. The happy lady with the Dino bag with her cheap groceries, the cheapest compared to 500 other compared to a basket with 500 groceries from other stores in Poland. Thank you for listening to this one. So Dino is in a quite special situation, also difficult situation, but I'm confident that they can manage. I trust the management. It's up to you to look at this video, reflect on your own views about Dino. If you're going to sell, if you think it's going to go further down, if you think it's going to maybe do this for another 3 years, right? Or if it's going to do that and then do this again. It's up to you. I'm not a financial advisor. I have no training in financial dealings. You should always reflect your thesis about any type of investment you're going to do. This is always for educational and entertainment purposes. And yeah, never trust some random guy telling you stuff about business and about how to manage your money on the internet, because this is not what this video is about. It's only educational and entertainment content. Anyways, I hope you enjoyed this video and see you on the next one.